Mayuresh Joshi from Angel Broking talks to us about these markets. Mayuresh, what's going on? We're unable to hold on to higher levels entirely. Global pressure and the global cheer has, in fact, eased off quite significantly in early trade now. How do you think we're positioned?
Afternoon, Anupriya. I think the Fed rate hike-off is quite imminent as the markets are displaying the same. But clearly, I think a large part of it has probably got factored into. And if the hike does happen over the next few days or weeks, clearly you might see some amount of correction probably happening onto the markets. But we're still sticking on to the base of around 7,500 that the Nifty had made some time back. So 7,500 to 8,200, 8,300 is our belief of the range of the Nifty, and the consolidation probably will take place within this range itself.
Okay. Quickly, I'm going to, the Supreme Court has referred the RIL government KG-D6 arbitration onto the Chief Justice of India. They've referred about 10 cases to Chief Justice following the government ordinance. This is information we're getting from the wires at this point. RIL, meanwhile, at the day's lowest point as that news gets released, 1.5% down. Pressure on the FMCG pack, specifically on the tobacco pack today, Mayuresh. From the beginning of the administration of the Modi government, tobacco has been under considerable amount of pressure. There's been no doubt that the government is moving towards a healthier regime, if I may call it that. Warning sizes have increased, packet sizing, advertising, a lot of restrictions across the board. And now with the 40% tax coming in the GST proposal, clarity is still needed whether that's over and above excise, does it subsume excise at this point. But it seems like tobacco could be in for a body blow at this stage. How would you really weigh out ITC?
Clearly, as you're saying, I think the ambiguity still remains, and if one really assumes on the recommended rate of 40% that the committee has probably given out, the central excise duties at the existing juncture, I think a lot of tobacco companies specifically pay anywhere between 58 to 62%. Now, clearly, I think if 40% is not including the state excise, it will tantamount probably if you add the excise to the 40%, the state ones, you're clearly looking at either the tax rate being same to what they're paying currently, or the tax rate probably going up in the near future. Having said that, probably I think the government intent, as you're rightly saying, is very, very clear in terms of consumption of tobacco probably expected to go down. So clearly, I think the volume degrowth that you're seeing in a lot of these tobacco companies are very, very evident. And though they're offsetting that with price increases, the realizations in terms of pure cigarette contribution for a lot of these companies might not pan out in terms of the earnings expectations that one had, say, a couple of years ago. The other businesses is something also that one needs to look out, specifically in the case of ITC. The cigarette contributes significantly to the bottom line. So clearly, I think other FMCG ex-cigarettes is struggling. You're looking at the paper boards division, which is struggling as well. Hotels posted a reasonable number, but again, I think it will take time for them to have some amount of respite on that front. So clearly, our take is that a lot of these tobacco stocks, if the 40% is implemented, and if one really assumes the tax rates remaining same at the current nature of increasing going forward, a lot of these stocks might underperform the markets over the next 6 to 9 months.
That's exactly what we're seeing right now. VST Industries down 3%, Godfrey Phillips down 5% as well. On the other side, there's been some good news for Asian Paints as well. The GST proposal would say at the current revenue neutral rate, Mayuresh, is a definite move up, considering paint companies effectively pay about 24% of tax right now. On the other side, there's an anti-dumping duty that the government has imposed on certain chemicals that I'm not going to try and pronounce at this point. Beneficial for Asian Paints, IG Petrochem, as we understand as well. 3.5% up for Asian Paints. Would you be attracted to this counter, given the fact that its basic input crude, and that would be the biggest trigger today, is back again near that 7-year low?
Well, yes, I think, and the way the crude prices are probably falling down or expected to remain stable, say between that 40 to 50 kind of a mark. A lot probably has got played in terms of how the EBITDA margins have panned out for a lot of these companies, including Asian Paints. Specifically, titanium dioxide prices, which form 40% of the overall raw material prices, are down significantly on a year-on-year basis. But clearly, I think it is the volume story that will take into account Asian Paints growth prospects. So decorative segments had a volume growth of 7%, and that is really contingent on how the economy really fares up, how housing demand comes back, and what kind of repainting cycle one really sees. specifically in tier 2, tier 3 cities and rural India as well. So clearly I think an oligopolistic play, and again I think if you're looking at the kind of price actions that Asian Paints has done, they've only done a 2% cut over the past few quarters. So clearly I think the margin benefits staying with them. And again I think valuations at 40 times on the higher side, but the premiumization story probably continues for Asian Paints. So would I buy at the current juncture? Probably wait for decline, but investors holding on to the stock at lower levels should continue to hold on to the stock.
The ONGC CMD at this point, Mayuresh, is saying that the current crude oil realization stands about $42 to $43 a barrel, a mild improvement, if any, from the previous quarter. The stock's down, putting quite a bit of pressure on the Nifty as well. Would you continue to be slightly slightly disappointed with this stock, or do you believe there is enough of a dividend play that the government will have to play out given the fiscal mathematics?
No, clearly I think the point of realizations probably staying low is having a telling effect onto ONGC stock, and that has been happening for the past few quarters. And again, I think the kind of range that one really talks about in terms of oil, and I'm no expert on that, but again between 40 and 50, the underperformance in terms of core realizations coming through will definitely play out in terms of how the earnings pan out for ONGC. The dividend yield component might be there, but again I think a lot of these companies are having very strong or rather very weak business fundamentals, whether that is ONGC, Oil India, considering the current oil price scenario that is probably panning out. So in terms of what the stock might deliver over the next few quarters, I think we're still assuming that the price stays in the range that we're talking about. The underperformance for ONGC, Oil India would continue. I leave aside the dividend yield, probably I think even if you take that into account, I think the underperformance in terms of core earnings estimate will still be a little bit lower than what the markets might probably meet out.
Okay, thanks for that, Mayuresh. That's the recommendation coming in from Mayuresh Joshi from Angel Broking. I want to quickly focus on a mid-cap stock.